Good morning, everyone. Welcome to the Euro Trade. I'm your host, Marcus D. If we're meeting for the first time, I've been trading for almost 20 years, and I'm a commodities trader, so you will see me trade a lot of precious metals and a little bit of gasoline futures, natural gas. So energies and precious metals are my two specialties. Alright, so let's start the day by reviewing my Asia trades, because I did trade Asia. I managed to catch this move. We had a classic smash for the Globex Open. Then we had a consolidation, which then went on to reclaim 84 level. That was the level that was the nearest. It had some open interest there in the options activity, but ultimately it was not able to break the supply from yesterday's COMEX, and now we are still there. We've already had the wick above Asia high and a reversal, and yesterday on that big rise up, the implied volatility went quite a bit higher. That usually warrants caution. So while this, while the precious metals could still go higher, I do think that we have some danger of a big pullback. So let's have a look at the developments on the daily chart. So this is what a daily chart looks like. One thing I'm going to do is just hide the drawings. All-time high is within reach on silver. However, like I said, there are certain things that I'm not liking here. If we manage to firmly go above 86, that would mean the bullish thesis is back on. Now, when it comes to intraday levels, we have to look at things in a little bit more granular way. So what is the volume profile doing at the moment? Well, we're still building value in this top part. London Open brought a pump higher that did the liquidity sweep, and now we're reversing. If we manage to break below 85 again, that would signal that we're going to be in a negative gamma again, and in that case Asia low at 83.40 becomes very possible, and so does the ADR low, which is much lower. And when it comes to the put options, there's really not much in the way to the downside, so that always increases the risk that if silver starts falling and gold is following, or gold is usually the one that starts the reversal, you have a very good chance of everything just snowballing to the downside, because the dealer hedging then amplifies that movement, and we've seen a lot of amplified movement. So all of these products offer a lot of ticks in a single day. Whilst that is opportunity, that is also risk, so please be mindful that that we could have some snowballing happening as a pullback. Alright, so 85 line in the sand on silver. If we're going to go higher, absolutely has to reclaim 86, and also the next step would be 87, but that's also very thin, so I wouldn't really expect 87 to give anything but a temporary hedge before they go higher. Be very careful trading metals. They are fickle beasts, and they're very time dependent. So I've spoken about this many times before, where there are these patterns. So you have the Tokyo Open, or let's say Globex Open, and then they usually do the wrong move in the first sort of 90 minutes to 2 hours. Then the Shanghai Exchange opens, they typically reverse that. How high they go is a matter of context, obviously, but if you are in a good place for longs, where we had a decent pullback, it's all very healthy, then you might see this move that happened for Shanghai as a safe bet to keep the trade going. Now, it's not, it's not advice or anything, it's just how I trade. But one thing that I don't like about it is that we didn't keep making higher highs. So we stopped and then did a very big pullback down to VWAP, which held. However, if we want to see any sort of further movement to the upside, we not only need VWAP to hold, but we also need 85 to hold, and 85 is a definite decision point here. Right now I don't have a great trade, so the liquidity sweep that happened at Asia high, it was when I was still asleep, and I am running a little bit late today, so I woke up slightly later because obviously I was awake until 3 a.m. And then I sat down to do the stream and then realized that I didn't give my King Charles Cavalier his heart meds, so I had to go and do that, which is why I was late for a couple of minutes. And yeah, so now the trade location is gone. If we retest 86, maybe do another little sweep there, maybe there's a trade there, but as we know, London for this summer day likes to die a death when it comes to volume. I think I'm on fast markets today, so let me just for the first hour, you know, let me just double check the schedule. But yeah, I was booked in. Yeah, so I will be on. Is it the first hour? I'm not sure. Should really check my schedule, shouldn't I? Yeah, so I'm gonna be on 8:30, 9, 10, 11, 12, 1, 2. Yeah, so for the first hour of fast markets, you will see me on there today. And then obviously there's a silver fix, right? So Shanghai behavior and a reversal, that's one thing. Then you have the Tokyo either profit taking. I mean, I suppose this would be this move from VWAP upside. That could be considered post-Tokyo profit taking. And now they're reversing that. So, you know, it's an interesting outlook today. And I'm basing this because every time I saw the implied volatility going higher, I also see that there's a huge pullback pretty much the next day, maybe 2 days after, but yeah. Trade quietly, says Heidi. Can you explain your levels in data reading and how do you design them? Well, it's a product of me starting off as a swing trader many moons ago, so literally 2007, and then slowly working up to develop that over time. So in 2013, so through I was already a pretty successful swing trader for 5 years, I decided I wanted to make this into my career. So I stopped doing session gigs. So I was a session musician, pretty high profile one. I was an alto saxophonist and a guitarist. And then I gave all that up and realized that intraday trading is much more difficult than swing. So then I started working on adding things. The first thing that they taught me, because I went for an apprenticeship in Chicago, they taught us volume profile. But it was only kind of the basics of it. However, that still had a very big impact on my results, like almost immediately, because it gives you situational awareness, right? So I further went to develop my own way of looking at profile, because again, you can, how does Hogue put it? You can peel an onion 1,000 ways, and that's definitely true. So I look at open sentiment in relation to where, let's say, COMEX opens to where the value area from COMEX was yesterday. I use the edges of value if we're opening outside of value for my decision points and trade locations sometimes. And then I will use volume profile intraday for further read of what is actually going on. I prefer TPO profile for certain things as well, because I do believe that TPO profile has more resolution in it. So that's like the first two steps. So larger time frame, what are the swings doing? Where's the big footprint of the big institutions on the large time frames? Because those moves are not made by your friend Dave down the road. They're made with some really big inventory by the big boys who have very deep pockets. And that's why we start by looking at large time frames. Now, on silver, there's not really much to say. We had reaccumulation followed by a pump higher. But copper, though, let's have a look at it. Copper is in a precarious situation where we have this supply. So I think this supply, was on a 4-hour time frame, and they're struggling, right? So we weren't able to break it the first time around. Huge pullback, followed by very, very flat price action. And what's happening now? Well, we have a range, right? So now it's down to me to figure out whether there's more shorts there or whether this is going to break. But one thing that I don't like doing is going longs into larger time frame supplies, because even though they might break through it, just by the fact that there was so much inventory here, there's still a lot of interest in shorting from this level. So whilst it's a good idea to have a look at the large time frames, you can't intraday trade from them because they are very big. So I just use them as directional indicators. So the first cornerstone will be supply and demand, quality of them, how far they are located, how are we reacting or not reacting to them. So that's the first step. Second step is looking at the open sentiment via the profile developments. The third cornerstone, is my average ranges. So they are plotted as levels, and they represent the statistical extremes on the day. I also go one step further where I use something called average session range that I kind of discovered, if that makes sense. It's my twist on using the averages over a number of days, but only applying them for the current active session. And those can actually be very good stopping points. So for example, right now, average session range on silver is sitting literally around 84, but we have the bigger ADR that may come into play all the way down at 81.58. So once we are there, we can then see whether there's any engagement to the opposite side. Time of day plays a huge part in what I'm doing as well. So because I'm a commodities trader, they tend to do certain behaviors to a very high probability at certain times of day. Usually it's connected to either exchange open or exchange close. And out of all of the three exchanges that we have, I would say that COMEX is the messiest. So I typically avoid the first hour of COMEX. That's in my London GMT times from 1:30 p.m. to 2:30 p.m. And then I basically look for extensions, maybe an establishment of another range or something. And then finally it's just price action. So there's four cornerstones, four kind of frameworks that I use to get the levels. As a part of the overall picture though, I do have gamma exposure levels, and I get those from the monthly options expiry. Even though I've always used option levels as magnets and to see whether we are in positive or negative gamma, until we had some more sophisticated tools to quickly crunch data, I wasn't exactly able to get the options levels for like 3 different products or 5 different products in the space of like 5 minutes. Now that has changed with the invention of AI. Even though I write code myself, I do write the piece of software and then I will give prompts to the AI to crunch the numbers on a day-to-day basis. So I have an IV tracker. I have the crunching of all of the monthly options levels, and then I combine that with Mentor Q, which has end-of-day levels. And if you're looking at commodities, those end-of-day levels tend to be not super fluid, if that makes sense. So they tend to stay. So I use those as orientation points along with the other stuff. Positive or negative gamma will decide whether we are in a mean reverting situation, gamma squeeze, or a negative gamma, and that brings certain price behaviors intraday that I feel are very beneficial for intraday traders. So once, like, it's a doozy to first grasp all of that, but once you start to realize that there are steps to it, so it's like positive or negative gamma, mean reverting or going crazy. Then you go to the next step. Well, where are the orientation points? Where are the big open interest levels that may cause trouble, like the danger zones, as I like to call them? And then I just kind of smush all of that together, and I get my situational awareness. This is also why I am pretty confident in my setups, because I have all of the above working for me to figure out exactly why, how it looks, what's happening, and what is the highest probability option. So that is just kind of the gist of what I do. Now, obviously, if you're a beginner, that's going to be very complicated. I did not start with all the fancy tools immediately. In fact, initially I was just using supply and demand. But as I went through several black swan events, I found the need to find a better way to scale both the stops and the outlook and the targets and everything to the ever-developing volatility of the product. So, we had silver that's now trading like 1,000 ticks a day, literally. And if you go back like some 5-6 months, you could have done a trade on 35 ticks, and it would have been a very stable trade. And you can also see that on the daily ranges, right? The size of the candles, if you will. So look at how small the candles were, and then suddenly we get to post-Christmas and everything goes insane. So now we're in this amplified volatility. There's uncertainties with a bunch of things geopolitically, so not surprised, but there's also some potential supply worries, which is amplifying the silver interest. And from what I've seen on X or Twix, everybody now trades silver. Apparently everybody's a silver trader now, so I'm always surprised how the crowd is strong. Like, I've always looked at silver. If you look at my pro development program, there are silver charts in there, and I made that in 2018. So silver was always on my radar. So it's like some people want to trade silver like equities, and it's like, it's not a great idea, that. So they get surprised when, they're in a great trade, and then, like, for example, yesterday, this looked like a breakout, right? It's like, oh my God, it's breaking out. And then what you get COMEX pre-30 minutes close, smash, then a test of the new supply, and then smash. This is a move of almost 500 ticks. So if you're not prepared to read price action objectively, commodities will really, really punish you, because they can do this sort of stuff. Literally blink of an eye. And before you knew it, you've lost all the profits. So the trade locations have to be absolutely spot on. Whenever there's a product that moves incredible amounts of ticks in a day, some sort of precision needs to take precedence, especially if you are on a prop account. Like, if you have a big account, you're well capitalized, and you have an actual 6-figure account, you can probably absorb some of the intraday madness with larger stops. And larger stops, I mean 120, 150 ticks. Why? Because we have 1,000 ticks availability in a day. Or let's average that out, 880, let's say. But that's still a lot of ticks. So using like a fifth or a sixth of the move of the day for your stop is generally a good practice to have. So that is, there's just some of the things that I think about and that keep me awake at night, trading Asia. Is that an indicator? So Adam and Mikey, so Mike says, where can I get your levels? And Adam is asking, is that an indicator? No. So Topstep doesn't allow the third-party indicators. So whenever I do my levels, this is what I spend 30 minutes doing. So this is the platform where I have my software tools. I have a software development company called Blatek. I own that with another business partner, and we're a software development team. So we create nice little tools like this. This is all Blatek indicators, and we have this little nifty back test on the chart. Doesn't erase candles, but it shows you all the levels, TPO, everything as it was. So that kind of helps me out. But when I'm looking at the levels, I will typically look at this and then project where, like, let's say this is ADR high, ADR low, and then I take that and plop it on the chart in Topstep, so I can have a visual representation, so I can talk to you about it without going, whoa, this is ADR here, and then it's like, where D? Oh, it's 87.905. So, having that visual reference, especially for me, I'm a very visual person, it's important, right? So I think it somewhat simplifies the outlook and the diagnostics of the chart, coming up with thesis and all that. So yeah, where can you get the indicators? Well, we are creating stuff for Ninja at the moment, but right now they're still only on MetaTrader 5 via AMP Futures, which is the only company there. Why? Because back in the day I was a swing trader, I was in Europe, and MetaTrader was the biggest retail platform, and yet nobody was making tools for independent traders who take this professionally and seriously. So I decided that we're going to make, well, it wasn't just my decision, to be honest. I was thinking we could make it more modular, but my architect was like, no, let's focus on the European market. And now everybody's turned to the futures. So yes, it's on futures MetaTrader 5, but many of you dislike that. So this last couple of months, we've worked on a new piece of code that takes in the ADR levels and the profile levels, and that then plots them in a Discord server. So it's not a teaching, coaching server. This is all just levels being printed 3 times a day. So you get, let's start from midnight here, so you get market profile levels for all 3 sessions. This is then repaid for the relevant exchanges, and then you get daily range levels, that's the ADR. You get target high, target low. You then also get the session range levels as the sessions are opening, so this is Tokyo. And then throughout the day you get this set of levels printed 3 times a day for the relevant 3 exchanges, depending on what you're doing. And basically you would just do the same thing that I do with my Blotic indicator. So you take the level, so let's say if NQ, for example, says target high 26,143, you take that number and you put this sort of ADR high on your chart, and then you have a visual reference. So it's not super fancy, you won't get the backtest mode, you won't get the line changing when we hit it, but it's still sort of a workaround while we work on other platform offerings. Now unfortunately TopstepX is not going to be a part of that because they don't allow third-party indicators at this time. If that changes, we'll jump at the opportunity to code something up, but at the moment it's not possible. So yeah, I do these levels as my everyday morning prep. So I get up, look at my levels, plop them on this chart, and then I also use MentorQ for the overall levels from the end of day developments, but then I look at the monthly options as well, and I crunch all of that, and that's how I can come here and talk to you about what I'm expecting today. Out of all of these 3, I think copper is the strongest, interestingly, even though it's struggling around the supply, but it's the only one above Asia high. Whereas, you know, gold looks the weakest, which is worrying because gold is the one who kind of plays a tune, and then these others usually follow. Not every day, because silver can go on its own, in its like come up with its own story on some days, but they are heavily correlated, right? At the moment, I'm seeing a divergence between copper and silver and gold. And it's the only one above the Asia high. But at the moment, volume is falling off. So we'll see whether we have any further setups. Maybe as we get to the London fix, which is going to be midday. It's going to be in about 2 hours' time. London fix typically brings sharp reversals. We can see that happening here. This was the London fix, 12 p.m. GMT. And then what do? They run it back up. So 12 p.m. London fixing price by the LBMA is definitely a decision point. But this early on, maybe you can get this sweep if you're awake, which I wasn't. But, you know, I have a nice little cushion for today. And to be honest, me having to be on the fast markets, I want to keep as much of this as possible. I actually may just lock myself out until the beginning of the fast markets, and then we'll see what's around. I dislike trading before 3 p.m. my time. That is 9 a.m. Central. So I'll probably lock myself out for the first half hour so we can have a look at what they're trying to do and then maybe try and find a trade into sort of 330 or maybe 315. We'll see. So yeah. So how do you get the levels? Like I said, you have two options. You have blood tick indicators, which are one-off charge. They're not super expensive. We try to keep them fairly cost-effective. And then the other option is just getting the plain levels on the Discord channel. Now that one has to be done through my YouTube memberships on my own channel, so Mark Stalkers, and then you would join and it comes up with like different options. You can have a premium level where you get all the channels, or if you just trade equities, you can just sign up for equities. That's pretty cheap. And yet the invaluable option to just look at these levels visually and to have them without you having to actually calculate anything elsewhere or having a look at ADR, then projecting it onto the start, like it all subs time, right? So if somebody can say, listen, here's the ADR high, here's the ADR low, here's your value areas. The reason why we're doing values is because we calculate them in a particular way that makes it more accurate to where the distribution curve is. Some of the other platforms, they always come up with like weird levels, and then it turns out that it's not particularly accurate. So that annoyed me because I'm a nerd. So we worked pretty hard on getting our levels as close to Dalton's original ideas of how to calculate values. So that is all on our Discord server, but it has to be done through YouTube memberships. You do have to connect your Discord account to your YouTube before you do that. And then Discord is a bit weird and stupid sometimes, so you have to sign up, close your Discord completely, not just like click X. You have to actually exit from the taskbar. And then Discord does like this sync, automatic sync throughout the day. So it's not instantaneous, but within like a couple of hours, they kind of finally grant you access. And yeah, so that is how we are running that at the moment. So yeah. All right, let's have a look. Can I go over NQ? I can't really. You know what? Because I am not really an NQ trader, you know. I am short DAX at the moment. But that is these days as close as I get to anything related to equities. So this is my current DAX trade. It's playing off the value acceptance, and then we'll see whether we can rotate further. We're coming into some demand here, so we'll see how that works in a bit. But yeah, we're already kind of nearly halfway into value, nearly down to point of control from yesterday. So I figured that would be a good one. But I haven't looked at any levels for NQ. I don't trade it enough. In fact, I don't trade it at all. I mean, I don't think I'm done an NQ trade for like 3-4 months. Frankly, I think there are better products out there. I feel like a lot of retail traders are just doing whatever people on YouTube are doing. Oh, who's trading, you know, NQ? And then everybody was trading NQ ever since COVID. But now that seems to be shifting slightly to silver, which is a better product. You know, once it decides on the direction, it actually goes. Whereas NQ has this annoying psychotic intraday, intra-candle price action that me, as somebody who is mid-40s and my brain doesn't work as well, I've been doing this for 19 years, I want products with follow-through and no drama. So I don't like NQ, and frankly, I think there are a million YouTube streams out there that cover NQ. You can refer to one of them for levels, gamma, outlook, and all of that, but I'm not your trader for NQ. Okay, because I would have to go in there, put all the levels, spend credits to ask Opus to collate the stuff, and then my IV tracker did not ping any APIs for NQ either because I don't have that set. So I'm not going to have the IV tracker, so I don't know what it's doing day to day because I don't care. So yeah, I think there are plenty of streams out there with NQ levels. You don't need me to spend my time doing that. And I'm sorry if that's not the answer that you want to hear, but, you know, I need to keep my focus and stay in my lane, which is precious metals and energies markets. That's what we're here for. So if that's your interest, great. And frankly, I think NQ is not suitable for 95% of the people who are trading it, and I think you'd be better off moving away from that horrible little thing. Because it also plays with emotional regulation of everybody. Very few people can stay calm trying to hold an NQ trade over a couple of hours. Like, you need a superpower to do that. Because the price action, right? It's like up and down, up and down, up and down, up and down. It's almost like it's on a rave, right? Tss, 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 tss. And all the lights are flashing and everything's going crazy and everybody's doing substances. It's like, really? So yeah, that's my thought about NQ. Do I ever buy into panic dips within a bullish context, or do you need reversal candles to print on the 5 minutes? So in the 5 minutes, I would... I look at Bookmap, so I'm a tape reader. So when we get to my level of interest, let's just say that's 85. No reason, just, it is a gamma flip point, but let's say we get to 85. As soon as it hits 85, I start watching tape. And then what I want to see is maybe a little bit of an overshoot, but then I want to see them either absorbing the shorts, so some buyer is there with a bubble that is almost halfway. I also look at what is going on with cumulative delta, right? That's the other part of reading price action intraday and on the fly, if you will. You have a level, and then you're like, all right, we're at the level. What are they doing here? And then you go more granular. Now, tape reading was a very hard one for me. I think I only really started understanding, because before we only had time and sales. It was like horrible. But now that we have Bookmap, it's very visual. Again, I'm a very visual person. Time and sales, just numbers flying on the screen. Like, yeah, you can sort of see stuff, but how am I supposed to figure out? I don't like seeing just pure numbers. I like, I'm a musician. I like patterns. I like notes. I like, and in fact, when I first saw the candlestick chart, it reminded me of note sheets, right? So I was like, what is this? I have to know everything about it, like right now. But time and sales was the old way to read tape. That and the dome, all involving just pure numbers. I'm not very good at that for some reason. It's almost like I have a blind spot. Like somebody just gives me numbers, and I'm like, I'm great with words and like language, but pure numbers, I just glaze over, right? So I just wasn't really taking in the information for many years. And then Bookmap comes along about 5-6 years ago, and it changed everything. I could finally see the events that happened. Like the sweeps are very obvious. You even have their indicators that are order flow based. All right, if copper bleeds back down, I know I'm wearing silver because I made money on silver, but if copper bleeds back into the Asia high, I may actually pop in a short here just to get down to the 6 evens, which is also where VWAP is. And I'm going to use a micro because obviously I want to preserve most of the profits that I already have, so I don't need to trade today. And I think I'm going to use... Now, if I use a 45 tick stop, that's not going to put me above this previous high. But if we get that momentum down, it won't matter much. So I'm going to do... you know what? Let's do 55, because that's going to put me into a nice situation. And let's now focus on this. Maybe go down to a 500 tick chart just to see how the movement is happening. And I'm gonna make this a little bit filtered so that I don't see people with 1s and 2s. Let's see. Asia high, decision point. Are we going back? Are we not going back? it would be nice if gold also makes a move. Okay, so that's in. So what I'm going to do, I'm going to recycle this silver here so we can watch how this looks. I'll move this to a more sensible target and then see if we can get some follow through. So it's definitely trying to trying to attack. Don't need this here either, so I'm just going to clean it up. So this value low here, that's a developing volume value. That is a point of interest as well. But really, because they've rejected this, if gold continues to go down, at some point copper, because copper has this like delayed reaction on whatever gold does. So gold kind of gives you maybe about like 10 seconds of insight of what should happen. It's like my little trick. So if gold really makes a run for the Asia low, then it should pull copper down as well. We're only risking about 343 here, so not terrible. To gain only about 418. So it's not the biggest trade because that is the kind of trades that we have for this time of day. But also, if this doesn't work, we pull back above Asia high, I'm not going to be waiting for my full stop to be hit. So I will be cutting it, right? So if I see strength in gold and then copper waking back above Asia high, that is not what I want to see for this trade. So I want to see a nice little pullback towards VWAP, towards the 6 evens level, which was a very important level. And you can call this a hedge now, right? So the dealers decided that 607 is an important level. So that is GEX2 at 605. So 605 GEX2. Which means that it's got quite a lot of open interest there, which is why it's weighted as 2. And it can frequently give a nice reversal, a fade from that area. But it's going to be slow because volume is a bit meh at this time of day. Can you trade micro copper on Topstep? Yes, you can. So yeah, micro copper is available, micro silver is available, micro gold is available, everything's available. I mean, when it comes to the product offering, I know they don't have DAX, that's Eurex, but when it comes to like the actual offering, I don't know of another company that has as wide a choice of products, right? That's another, plus thing with Topstep. Whenever I'm like, oh, I want to trade one of my weird products, gasoline futures, let's trade heating oil. Nobody has heating oil. Nobody has heating oil. It's such a rare product. And I'm like, why? Why? It's a CME product. What's going on? And then some companies don't have micro silver. It's like, are you kidding me? Who can possibly trade anything that is like, they're so expensive on the big silver. It's like $25 a tick. No one can, in their right mind, absorb that on a 4.5K maximum drawdown. So it's like, why aren't you offering micro silver? And they're like, meh. It's like, what? So you get a pick of the litter, right? It's like, well, what are we going to put traders, they want silver. Let's give them big silver because that's going to mess everybody up. But, Topstep is like lean hogs, live cattle, soybeans. You have all the ags, right? And then you have gasoline futures, you have heating oil, you have platinum, you have silver, micro silver, like literally so much choice that you can, there's really no excuse for you not managing your balance correctly. You can't say, well, Topstep doesn't have it. They do have it. And yeah, I wish that they would bring DAX into consideration. You see how the micro is late? I always find that interesting. So this is the full contract copper, and then it dipped down to 360. But the micro didn't really do that until like, what, 5-10 seconds later? That's very interesting to me. I sometimes use that if I am in on micros and I see that the trade is like not working. I use that to read the future. It's kind of my version, as close as you're going to get to a crystal ball. You're trading a micro with a little bit of a lag, and you're looking at the big contract. When I'm looking at tape, it's always a big contract because the big boys do not mess with micros. They don't need to. They don't care about it. Micros are a retail product, almost exclusively. So. Okay, so Mario says, hey D, I traded DAX, NQ, and dabble in oil lately in silver. Why not give 10 minutes for the DAX? Because nobody's doing it properly. Okay, well, this is, yeah, interestingly, these streams were supposed to be DAX related, but unfortunately they never got Eurex because they had some trouble integrating it into the dashboard. And, they're trying to make the platform really stable. As you guys know, we went through a huge growth, especially when we came up with the no activation accounts. Everything was under so much load. And I think MP said that he kind of took the ball off the stability of the platform in relation to how many users we had. All right, so we failed to make an all-time high on DAX, right? And we are now seeing the value acceptance, but let's kind of go through all of the charts. So this was the London high. This one trades during London, right? So London is its main session. The reason why these streams were for the time of day that I'm doing the stream, 9:30 a.m., is because I usually do a DAX trade. And very frequently when I'm kind of talking and stuff, I will have a DAX trade in the background. I actually just see that I'm making about $2,000 on that. Okay, so now this is my own kind of YOLO account. So that one, it's, I have the target lower down. It is a value acceptance, but I don't know whether I want to keep that all the way down. We have average session range low and the value low, somewhere in the vicinity of 25,411 down to 25,404. Last time I looked, 25,500 was sort of a decision point in the options chain, because DAX index, so DAX futures options are not really a thing, but DAX index options, kind of like the SPX, they are actually really, really good when it comes to figuring out what's going on. So yeah, we do have some interest lower down, but we are seeing the lack of commitment at the all-time highs and now a value acceptance. So what do I expect? I would expect to see at least the value low here. We are below Globex VWAP. Asia is very thin on Eurex products in general. It's not really, it's like an out-of-hours market, but you still get the wick above the Asia high. Here it is. So you get Asia high, wicks above it, and then what does it do? It retests at least VWAP, but sometimes you get a bigger pullback. I prefer when this happens to the long side, because obviously there's an equity index with a strong upward bias, but today, coupled with the value acceptance, this is actually not a bad outlook at all. So I do expect some more downside. Whether it's going to be clean, I don't know, but if I look at the TPO profile, it's not the strongest auction to the downside. It really isn't. Why do I say that? Because if you look at here, we're building structure. This information is just a TPO profile representation of the same graphical representation we have here. So it's building TPOs, right? So we have 3 TPOs per row, 3 TPOs per row. That's still a moderately strong downtrend. Now, as soon as you start printing 4 TPOs per row, that is my cue to end the trade early, because I do not want it. But at the moment, we do have that possibility of going back to value low, average session range for London low, settlement for Eurex for London, all the way down at 25,403, right? But is it going to be super smooth? Well, you still need to give it some leeway, because there will be some reflexive bounces as it tries to do that. Now, once the US steps in, we could see some reversals, and then them going back upside. Like, it depends on what the ES does, because as soon as the Americans start waking up, they literally begin to pull DAX along with it on most of the days. Like, there are times when there's Euro-specific events that decouple them from going in a similar direction. But one thing is that I really love when a pullback is so smooth, because NQ is going crazy, ES is going crazy, and DAX is just kind of slowly pushing in the same direction. And obviously you're not going to get as much tickage as you do during the London session, but it's still a very sweet fade. But yeah, it mostly fades the day's move, unless ES also goes into some mad downtrend. That is going to continue. But it does have that pattern of sessions chasing each other. So London does one thing, and then usually New York does another, on DAX specifically. So yeah, it's a great product. I love DAX. Out of all the equities, DAX is number one. Then I actually quite like YM on certain days, followed by kind of RTY. And then we have ES, and then all the way down at the bottom of the queue, we have NQ. Hate the thing. All right, let's have a look. Love to trade the Euro session on commodities, but it's so much easier at COMEX Open. Yeah, so I don't really trade too much during this time. If I do, it's going to be more like scalpy. So I certainly won't be chasing on most days. You know, sometimes, yeah, we have bigger moves, but really before my midday, so in another hour and a half roughly, there is no volume. Like, you can see that. Let's go down to a 5-minute chart on gold, and you will see what I mean. It's like it's come down below the average volume. It's like, it's horrible. And now we also don't have commitment to the downside, but we're still below that Asia high. So I'm willing to give it a benefit of the doubt for a few minutes. Like, if this doesn't move, I mean, I say a few minutes, it's going to be more like what was Asia high? 604.20. It's probably going to be like 15 minutes or so. I'm just going to make a little marker here, so I have it in relation to my position. Yeah, so when the volume is meh, I tend to kind of see what's there, grab a few ticks out of it, and then wait for the better time of day. But I really hate the first hour of COMEX. It's so messy on commodities. Never really has, or very rarely does it have any sort of direction. It's all like push, pull, push, pull. What's going to happen? Nobody knows. And then they decide for the London close. It's like, okay, everything's happened, the craziness is over, now let's go the other way. It's like, so I try to avoid trading. Like, I usually schedule a dog walk, because we go to a private field, so you can't just rock up and go, hey. There are like slots that people book, and I usually book them like a month in advance. So I usually try to walk the dogs in that time slot. And it just kind of keeps everything under my sort of compartmentalized times of day when I trade a lot better. Joe, don't worry, so since you're a gold member, I will add you on there, but just send me your, so I've just seen your post. Joe says how to access the Discord channel. So Joe is one of my market stalkers. We're working together on bumping up his skills and sharpening up things. So yeah, just email me with your Discord username, and I will send you the link, because our gold members and our pro development program members get access for free it's included in their membership. But for everybody else who is not a market stalker yet, you have the YouTube memberships option. It's a little bit different for our actual gold members. Oh, you have another question. Could you explain what is positive gamma and negative gamma? So that should be in one of the lectures. Although I need to review that lecture. I have some new lectures on the way for the course, for the program, that explain a couple of things deeper. So one of them is the entirety of the options chain, like how and what does it mean. And the other one, which I already recorded, it's tape reading, which is not, for everyone, but I just felt that should be in there at this point. Positive gamma means that the dealers are effectively long gamma. That means they have a long options position against majority of the investors, and then as the market is hitting prices or strikes with higher open interest, they usually hedge. So it's a mean reversion environment, okay? Whereas negative gamma is when the dealers are short gamma, and then something starts happening and they either have to keep buying or keep selling, which amplifies the movement upon the breakage of the strikes with the high open interest. So they don't mean revert, and in fact they go through them, use it as new support, for example in a long, and then it just kind of keeps going, gamma squeeze, right? But we don't have that yet. If we go below 85 on silver, that might be an option, but right now 85 is is the key level. Daniel says, be honest, how much do you love metals getting attention over NQ? These are your markets. Yes, I actually don't know whether I'm loving it, Daniel. Primarily because I'm seeing that silver has gotten a little bit more speculative since everybody and their dog is now a silver trader. It's like, oi, yeah, I was here first, right? Don't mess with my price action. Because here's the thing that happens. When retail gets a sniff that there's something going on, unfortunately, silver is a very thin market, right? So it's not like if you look at the dome and how much, size you have on there, it's very thin. So when suddenly you get, now I think that most of the smaller players luckily will be in like micro silver, and because it's the silver big boys that are, and yeah, the book is thicker here, I mean it's hilarious. That brings in more speculative movement into the price action. So I love the fact that silver is getting the recognition that it deserves, but do I love what the retail crowd is doing to it? Because I've noticed a little bit more push-pull into a candle. And when that starts happening, unfortunately, some of my products that I love and adore and, I absolutely live for, then I have to run away from them. But for now, it's not that bad, right? We have implied volatility. Silver is a bit jumpier than it was, but overall, it's a bit, it is more jumpy, but manageable. Let's put it that way. But I do love the fact that everybody's talking about silver and that everyone is like, wow, this thing moves. Like somebody who's an NQ trader, I saw it. I saw a comment in chat the other day when, I think it was last week, and they said, I just tried trading, I'm an NQ trader, I just tried trading silver for the first time. What the F was that? It's like, if you think NASDAQ is crazy, but silver is crazy and directional. I like that. I like the crazy yet directional. It's a big difference from NQ that's like up and down, and not by a little. NQ wags around in like 30 to 50 point ranges. That's a lot of ticks to range in intracandle, right? If you look at it over a 2-minute period, so let's, I don't know how liquid it's going to be now, but, DAX is falling very nicely. All right, let's see if my little target or value low can finally do its thing. Single prints left behind. Hey. DAX, silver prints. Now if this stays, this is actually a pretty strong movement. If it doesn't stay, it's going to mean I have to close my position out. So this is now a stronger auction to the downside if single prints remain. Why single prints? Because there's a hole. So it just dropped and then opened the candle further down. There's a single print. But yeah, let's see how that plays out. So yeah, NQ. So let's have a look at it on a 30-minute time frame. So it seems like it's kind of, it's down, but it's kind of up as well. Yeah, this is very quiet for NQ. Very, very quiet. Usually during the, but look at this price action. It's just so horrible. And this is the main thing. And if I look at this candle, so let me just put a marker down and maybe delete some of these because they are very... Ooh, look at that supply reacting. Isn't that funny? So I popped this in, I don't know, a million years ago, or, I don't know, a week ago, which is a million years in intraday trader. What is that? Is it a 4-hour or a daily? No, this was a long time ago. I think I placed maybe a daily chart. Like, what is this? I don't get it. I've forgotten. I haven't looked at NQ in so long that I have no idea what I was doing here. Ah, it's a weekly. Okay. Yes. Yes. Here it is. I'm just deleting these volume profiles because they are messing things up. We cannot see the candles because it's intraday and this is weekly. Right, so come on. Get away. Just trying to clean up the candle so you can actually see the supply that has been reactive for many moons. Okay, okay. These are all like intraday profiles, so it's like trying to delete profiles upon profiles upon profiles. Yeah, so I drew that. So when did I draw that? Probably months ago. I don't know. Because it's always been there for a while. And this is not GEX2 today, I don't think. So this is, again, an old level. It's still reactive. So this supply on this contract has been the top since October. It doesn't mean it's going to stay, right? It really doesn't. But it's one of those interesting developments when nothing much has changed for a very, very long time, right? Do we expect that to change in January? Probably not without some sort of a big external catalyst. So we would need, either the Senate decision or something, but it's very range bound. And, on an intraday level, you can even see that the ranges have started coming down, right? So we had these big candles still last year. And then something a little bit smaller. Then we have the summertime. Then we go into a little bit more higher volatility in October. And that lasts pretty much until Christmas, right? So halfway through December, let's say. And now the candles are smaller. The supplies are working. Do we have something happening? But when you look at this moving during the regular trading hours, it's so undecided. It's like up, down, up, down, up, down, bearish, bullish candle, bearish, bullish, bullish, bearish, bullish, bearish, bearish, bullish. So you really don't know until the actual end of the candle what direction they want to do. Whereas look at copper. We've been bearish on this 500 tick and a 30-minute tick for how long? We've been bearish for like at least 15, 20 minutes out of this candle, and it has not changed. So it gives you a better sentiment outlook. Whereas NQ doesn't do that. It's saying, I'm down, I'm down, I'm down, I'm down. It's like, what are you doing, mate? It's like, why do people trade this? Never got it. I never got the NQ thing. I'm sorry. I know that it moves a lot, but the intra-candle, unless you're like a scalper, which I suppose most of you think that's where you should be, and I disagree heavily, you need to calm it down. So markets that are fast, they need you to be slow. If that makes sense. So you can't just click buttons all the way around. You have to be selective. You have to learn to wait, learn to relax into the position, and then strike. And if you want to be a scalper, that's fine. Take a smaller piece of the pie. But just don't then go and, oh, I missed a big move. Oh, I'm going to go in again. Because that's not scalping. That's chasing. That's no plan. Just going along with whatever NQ does. And then it smacks you in the face. So then that scalp that you were planning is now not there. And then you just snowball into just clicking buttons like somebody's chasing you, like your life depends on it. And then at the end of the day, what do you have to show for? Nothing but a blown account in most cases. So most people hold on to the account for maybe 2 weeks. That's like, wow, you had the account for 2 weeks. However, a lot of the majority of the traders who get into XFAs, they will blow up after like 2 days, 5 days, just before a payout, just after a payout. Why? Because NQ causes emotional dysregulation, and I will die on that hill, man. What's the London fix? So the London fix, I explained it yesterday as well, is a time of day when LBMA, which is basically a company that is associated with the exchanges, but they're not an exchange by themselves, they set the pricing of silver for the day. And institutions and people who need quotes for silver will then use that particular price wherever it's right now, because you know silver moves a lot, so you need an anchor, kind of like your settlement. Well, London price fix is a similar thing. Gold is different because it has two. It has an AM fix and a PM fix. I don't know why, but it's just how it is. But silver, one price fixing per day as a benchmark for whatever people want to do, either price actual silver products or maybe price mark to market, which is how the institutions assess their overnight risk. They need an anchor. They need something to hold on to. And the LBMA price fixing once a day provides that. You can even have like price fixing for the bullions as well. So silver bullion, what are you going to price it as? Real time? Well, yeah, some vaults do that. But most of the time they will be using an actual benchmark for the physical products. So that's what the price fix is. And as a result, once the price fix is done, sorry, I'm just looking at this this gold here. So we're trying to bounce. Let me draw a volume profile here. Meh, don't like it. Don't like it. Why? Because we are reaching the value low and then bouncing from the developing value. There's also some demand here. And let me get the granular view here. Alright, so Asia high remains our anchor point here. So if we go above Asia high, and copper is actually following, I mean, you know, at the moment they're correlated by a factor of 0.6. So that's not quite good enough for, like if we were at 0.8, 0.9, I would be like, panic. But gold can absolutely pull. They can absolutely pull copper with it. But sometimes copper is the first one to make a move and then other metals follow. It's a weird one. Because you wouldn't think a base metal would have that much effect on precious metals. And I don't think it's an effect. I think it's just like an overall kind of asset class, metals class. And then copper being thinner, it's easier to move it. So institutions going to start to project their intentions on copper, and then very soon gold and silver follow. So right now, if we look at the 30-minute time frame, so let's use a big boy here. It's diverged, right? So gold is trying to go higher. Copper not even at its own value low here. Whereas gold tagging value low. It's not a strong reversal yet. It's just a bit of a reaction. Still below VWAP. VWAP is very flat though in gold. So that's not a great thing. It means it might be just ranging like it usually ranges. But copper had a bit more of an extended movement. So we're still below Asia high. But again, I'm going to be very careful here. I mean, if they just wick it up and I can't react, that's what the stop loss is for, right? But for now, it's all quite orderly. I don't like this movement, so I would need to see a sell-off into the end of this TPO, 30-minute time frame. And I would like the copper to just have a little drop, just a little drop, tiny drop. And then we've got something. Kareem says, good morning, D. Looks like it's ranging before the CPI. I agree. Yeah, I agree. But copper, like silver reacts. Obviously, everything reacts to CPI. However, copper is extraordinarily sensitive to CPI, right? It's a product that institutions use to protect from inflation along with gold. But because gold has gone bonkers, everybody's turned to copper. And they're like, yes, it's a good substitute, actually. Let's get some copper on your ass. Yeah. What does GEX2 stand for? Gamma exposure. Said that very weird. Gamma exposure weighted by the amount of open interest strikes. So call walls, put walls, highest open interest. GEX1, one step below. GEX2, another step below, but both GEX2 and GEX1 are very good. To be honest, even GEX3 can be good for fading. Right, so gold is going up, and I'm going to close this because I do not want that. So I just took the commission costs, and that is all. Did not want to see gold jumping like this. It's going to pull copper back up, and I do not want to lose any of this. So if it had gone nicely, I would have been able to sit on it, but it didn't go nicely, and there's no volume. Like, the volume is so thin. Look at this. There's just nothing. There is nothing. There is nothing. So we need to wait until it starts moving. Interestingly, the copper fix is the VWAP at 1:35 p.m., which is basically after COMEX begins. And then they have VWAP, and then wherever VWAP is, that becomes the copper fix. So it's a bit of a different mechanics from pure price-based gold and silver fix. What do I like best to trade? Any precious metals and base metals and RBOB and heating oil these days, but I was a crude oil trader for many years. I still look at it, but I don't necessarily trade it much these days because it's slow. It'd be slow. Oh, okay. A bit of a lag there. Alright, so this is what silver is doing, trying to pop up, but again, on very low volume. Very low volume. So yeah, there's no setup here now, sadly. Copper looked the best. The rest of them, this looks like a bull flag, if anything. And with no volume, anything can happen. Richard Jennings says, yes, also my description of NQ psychotic. Yeah. Yeah. Another rejection on the low of the DAX. I'm out of the short. Yeah, again, that auction, it is within, you know, it's within the moderate, I'm still in it. Within the moderate bleed down, and yes, we've closed out the single prints, but now we have the poor low at 466. Equal low, poor lows, however you want to call them, poor lows. Are they okay? Should we start a fund? Poor lows tend to be taken out, because if you look at them on a lower time frame, you will see that it's like basically a double bottom, right? Even though for a double bottom I like to see a bigger move, but poor lows typically get taken. So again, I'm using profile to keep me in the short on DAX for as long as it will give me. If we had excess, I would be like, probably should close that. But to me, this still has juice, and we've just run into the area of more volume. So then let's have a look. Yeah, so we're running into the low volume nodes, and then this one is a slightly thicker area, and then we also have a lot of thickness around the ADR and ASR. I still think value low is on the cards. Again, my trade. Let me put a marker on here actually. So just since you want DAX. What I like to do, I like to put a marker with my actual entries, and I hacked a fib tool to do that. So 25,507 was the entry, and then because this way I'm not focusing on the dollar amounts, I'm literally just trading the process. 25,552 is my stop. Okay. So yeah, it's not even sub like 1 hour, and you know it's below VWAP, it's below everything. I'm willing to wait until these poor lows are taken out, because it looks to me like the unwinding ahead of the CPI. And equities do this; they position themselves in the run up to the release. So I will still deem this as the auction that has the potential, but there's no access to the upside, to the long side. There's just poor lows, and therefore I'm expecting them to be run over at some point. Now I prefer the poor lows to be done on the profile for the next day scalp through them, which brings like liquidity sweep, and then I have 2 trades rather than 1, because 1 is a sweep to take other people's stops and then run it back down the other way. But intraday, when they appear, it's a little sketchy, because it just speaks to the moderately strong auction to the downside, obviously, and possibility that at some point those poor lows will get taken out. But like I said, if we had excess, if we just had a single print rising up into this volume area of higher volume, that will worry me more. This doesn't really worry me much. So it's just like, yeah, normal ebb and flow. So I'm still looking for my 417, which is close to this target zone. Now we get close to that if we start to dilly-dally around, or the time of day is wrong, or I'm not able to reach that target until the next release on the day. I will close it. I'm not going to be a dick for a tick here. Whoops. So anywhere really, anywhere from about 1.5, 1.6 all the way down to 2R, it's good enough for me. But yeah, I'm not closing this yet. Don't think there's a cause for that just yet. What is CPI? It's the inflation, and it affects everything, because it's the inflation. Pedro says, Dee, do you have any spread betting accounts as you're UK based? No, because I got done by a large amount of tax, because somebody once lied to me that spread betting is tax free, and then I found out that it wasn't tax free. So what happened is that when I was still a new trader, this was probably like 10, 12 years ago or something. No, it was about 10 years ago, I think. Yeah. And, no, maybe longer, actually. Just trying to do my timelines. Doesn't matter. Anyways, I had a spread betting account because I'm like, oh yeah, but I had no other job, right? So I was just a trader. So I'm like, I'm going to open up a spread betting account. So I popped in like 50,000 in it. So it was basically not a massive amount. It was, just enough. And then I started trading that. I ran that up to just under sort of $500,000, I think. And then I withdrew a lot of that. And then there was the moment, whole year after. So we spent all the money, right? Because, there was like, never mind where it went on, but, mortgages, stuff like blah, blah, blah. Holidays, stupid presents, things that we didn't need really. So anyways, I'm under the impression that spread betting is free. So it's like, nothing. And then a tax bill comes, it's like the GDP of a small country. And I was like, so, I obviously got scared because I'm like, oh my God, now what? Jesus. And it was then revealed to me that there's a gray area about the spread betting account. So here's the rule. If you have a job that is paying you enough, and what is enough? Nobody knows. It's a very vague description by the HMRC. But presumably paying you enough to cover normal living, like what is that in the UK? I don't even know. I would say that's 150k a year, but some people live on 30 to 50. I don't know how, but they do. But let's say that you have a job that pays you, I don't know, ballpark £75,000. And then you make extra cash through the spread betting. In that case, it might be deemed, especially if the profits are not bigger than, again, that's another gray area, if the profits are not bigger than what you actually earn in your actual job, then you might be let off. But the caveat is, if you have no job, trading is your only job. Oh, HMRC definitely want a piece of that, man. So yeah, it was a very kind of big slap in the face. And me finding out that spread betting, despite its big, it is free. It is absolutely not free if you're just a trader with nothing else to your name. So yeah, it was a huge stressful time in my life because we didn't have the money. We had to make a deal with HMRC to pay it off in chunks, and it literally took over our lives for like a whole year. The next year, obviously, because it's like a year late always. It was horrible. Like, it was the most disgusting experience of my life, and I never want to do that. So these days we're like 100% sure of what we're doing, and how I run all of my trading business is through a limited company. We have about 3 entities for various purposes, and it's all done like black and white, like every single thing. So yeah, spread betting, just be careful. If you do have another job that is paying you pretty well, and those profits from your job, the profits from the trading are not bigger than your salary, then you may get a let off the hook. But as soon as that changes, you are labeled a professional gambler, and at that point, HMRC will come after you. Which is great. I mean, that's just great, isn't it? It was a very sobering moment for me. So no spread betting account since then, so I haven't had one since 2016 at all. Because I gave all of that up. I went futures only. I think I had a small Forex account at one point, and I was like, okay, well, I'll pop in a few trades there. But generally, no. It's all futures. It's regulated. You know where you stand with income. You know how it's taxed. There's no ambiguity, no gray areas. So I don't work in the gray areas. That's not good. How many screens do I have? 1, 2, 3, 4, 5. They're not big. They are, what is this? I always forget the size of my screen. So I have 2 bigger ones at the top, but they're not massive because my camera has to go in the middle and my light. Are they 27 inches, the 2 there? And then the ones that are lower, I do believe they're about, I don't know, 20, 24, 25. I should really, I can't see anything close up. Because if I get closer, my eyes are starting to fail me. But yeah, so it's like 3 slightly medium screens, you know, nothing bigger, and then 2 at the top to surround my camera and my light. I do also have an Elgato teleprompter for like scripts and stuff, and when I'm doing lectures, obviously you don't want to fumble, you want to do a clean delivery. That actually acts, and that's mounted onto my FX3 camera. So that actually has an ability to act as another screen, but it's only small. So I use it for like conferencing and stuff. So if we are doing, you know, if I'm talking to someone, I don't want to be like staring here and kind of like, yeah, we're talking. So I like to put them on the display. So I suppose that's like a 6th screen. So yeah, but mainly 5. Yeah, I can probably work with 3, to be honest. But that's not while I'm streaming, because while I'm streaming, there's one of my screens that is designated for YouTube and OBS, and then you have TradingView on with mental Q levels on this one. Then I have my main charts with my Blocktick indicators on the front one. Then I have Bookmap on that one, along with Discord side by side, because Bruno and I have to communicate. And then also I have TopstepX here. So every screen takes up just the right amount of space. It's just, you know, if you're not a streamer, if you don't have like a team and you don't need to communicate with people, you'll probably be okay with just 2, to be honest. But, you know, it depends. Everybody has different needs. Everybody who's a streamer, I don't know anyone who can operate cleanly on just like 1 screen, because you don't have control, right? Everything is just there. Maybe if you're gonna crop it in OBS somehow, and it's just like horrible. I like to I literally like to be comfortable with screen real estate. So Mario says, great stuff. I will keep writing. The only thing holding me back is the CPI. DAX sometimes makes big swings. Oh yeah, you can expect a big swing on CPI. Just don't trade directly into it. So whatever happens to this trade, I will take it off. But, you know, we do have hours and hours before CPI. Genius Case says, gambler. Yeah, so HMRC considers all traders who trade intraday professional gamblers, if that's your only income. And professional gambling in the UK is taxable. Welcome to the UK, where a lot of gray areas are misinterpreted by people, and then HMRC swoops in and takes all of your cash, even if you don't have it. Cash grab. Stephen C, wow, says, I lost 156K on a CFD 1 gold trade held over 2 years thanks to Instagram. Ouch. I'm sorry to hear that. That is very, very difficult. I had one day where I lost $250,000, and that was at FOMC. Not because I got it horribly wrong, it's because I couldn't exit, and then in time, because it was an FOMC release, it actually went in my favor by 140 ticks, and then I couldn't exit. They just weren't accepting orders. After that, the platform locked up, and no, it wasn't TopstepX, it was actually CQG. And then when it came back, I was staring at a loss of literally, it wasn't quite $250,000, but it was like $220,000. It was very painful. Luckily, the account was much bigger than that, so it was a huge chunk, like it was about 10%, but not not terrible. Yeah, Bruno just sent me a dude with 1, 2, 3, so with like 9 screens playing Minecraft. You know, I'm playing. This is what Bruno sent me. This is a great idea. I'm actually playing a game called Satisfactory. It's kind of like a pretty Minecraft, and whenever I'm like relaxing or having some time off in between trades, if I'm not required to nap, because sometimes I get very tired because of the illness that I have, and I just have to like sit down. But if I'm having a good day, I will actually sit down and I will actually play satisfactory for hours. It's like Minecraft, but it's super pretty. You're on an alien planet, and you start off building small, like you have a little crafting bench and whatever, but you're a pioneer for this company called Fixit. And then you get to a point where the game asks you to do like more and more elaborate stuff, and you end up building like these crazy factories that are you have to match the supply and the demand of the raw materials incoming. It's very similar to Minecraft, but it's just prettier, and to scale, like I know people do crazy stuff in Minecraft as well, but so that's what I do in my spare time. What else is everyone up to when they're not trading? That's my design distraction. I can spend hours, absolute hours doing that. It's great. Can you explain gamma walls for GC and where to find that info? So I didn't crunch the monthly data. I can't give you the mentor Q levels instead because they will be pretty similar. So we have GEX1, which is a pretty strong open interest price at 4,600. If we go below this entire area, so this whole area, we will be in negative gamma territory. So acceleration to the downside. And then really an air pocket until 45.55 and 44.50, where we have some put supports. On CPI days, though, be very careful because gold can be massively amplified, and it can just go into these irrational sell-offs or irrational rallies as well. So be very careful. Now, to the upside, we have GEX3, so moderately high open interest area at 46.25. And further up, we have a big gamma wall boy or girl at 46.50. So that, if we're still in positive gamma, that could be a little hedging area, but it doesn't necessarily mean that it's going to be the stopping point, especially if it's deemed that the CPI numbers require bullish metals, okay? And for that to happen, CPI would have to be a decent miss, but then you have the mix of technicals and fundamentals, so it's not quite that simple. It's like, oh yeah, terrible days, well, let's go up. It's technicals intraday. It's like, how high are we? Are we exhausting the ranges? I mean, we have plenty of range up and down because we have not traversed any of it, really. So ADR high is up at 46.54. ADR low down at 45.40. Big range, right? We're nowhere near it, so it could go either way. And that's why it's more like a 50-50 punt play. Which means I'm going to be staying out of the release until things settle. And also, I'm on fast markets. So I want to be able to trade that with some buffer on the day. And then further up, if we carry on into some mad day, 4,700 is the next main area, but there is some stuff around 46.80 as well. So literally like every, I would say 20 to 30 points, you have open interest to the upside. I mean, I would guess that, you know, there's something even higher up, but I haven't crunched the monthly options just yet. All right, that's going to be it for today. So we tried this little copper trade. As you can see, it moved absolutely nowhere, so closing it was the right decision. They're obviously waiting. They're waiting for CPI, so let's see what happens. Let's join everybody for the fast markets. I will be on for the first hour, so I will see you then. This was the Euro Trade. I'm Marcus D, and I will see you very soon. Take care.